Good afternoon. My name's Professor Rob Elliott. I'm going to talk to you today as one of the co-authors on the paper Bitcoin Research, What are the Final Frontiers? Today with co-authored with Professor Andrew Urquhart. In this work, my co-author and I set out to reflect on Bitcoin's remarkable journey since it was born, well, 17 years ago now, 16 years ago when we wrote the paper. We were going to reflect on this remarkable achievement, and we outline what we believe to be the most important directions for future academic research. Okay, so we begin, where do we begin in the paper? We begin by revisiting Bitcoin's origins, when Satoshi Nakamoto introduced the idea of a peer-to-peer electronic cash system in 2008. Neither of us could imagine the scale and the economic, technological, and geopolitical transformation that would follow from this. From a price of pretty much zero at its inception to around 124,000 in mid-2025. It's now down around 100,000 per Bitcoin as of this morning. Bitcoin's kind of grown into this global asset class. Alongside it, of course, there's a huge altcoin ecosystem, including Solana, Ethereum, and many others. A booming stablecoin ecosystem, which I'll talk about later, and a sophisticated derivatives market that's reshaped the kind of financial landscape and promises to shape that landscape much further in the future. So in our paper, what do? We argue that the time is right now to identify where the future academic research needs to take place, what we call the new frontiers of Bitcoin research. So we pick three central themes in this paper. First, institutional and country level adoption. We then look at the link between Bitcoin and criminality, just in terms of academic approach. And third, we look at Bitcoin's relationship with stable coins, as you know, with Tether and Circle, USDT and USDC. These stable coins are being pushed dramatically globally, and we'll see how that links in with the Bitcoin ecosystem. Future research, of course, we could have extended this paper. It could have been twice as long. There's work to do on Bitcoin mining ecosystem and how that links with environmental impact, links between Bitcoin mining and AI, as we see many of the Bitcoin miners pivot from Bitcoin mining into AI data center and HPC provision. And finally, the kind of emergence of DATs, which we call digital asset treasury companies, that are mainly focused on Bitcoin at the moment. And you've got, Strive and Strategy are the obvious ones, but also you've got DATs that now include Solana and Ethereum. So the growth of the DAT market and how that links with future development. So again, that's for future academic research. In this paper, we concentrate on just the first three. I'll go through those one by one. If we think about institutional and country adoption, over the last few years, there's been a dramatic shift in institutional attitude towards Bitcoin, of course. It was once dismissed as a kind of fringe curiosity, I guess you'd call it, but it's now been held by the major financial institutions, pension funds, and of course, sovereign wealth funds. And central banks are beginning to introduce Bitcoin onto their balance sheet. And it's often through the use of the spot ETFs, exchange-traded funds, launched in 2004. And these ETFs probably hold around 5% of all Bitcoins now. And it makes it a lot easier to hold Bitcoin rather than buying it on an exchange such as Coinbase or Kraken, taking it off the exchange and put it in cold storage. This is what the original Bitcoin maxis would do. But now the institutions are here. They often go through the route of holding them through the ETFs, such as IBIT, run by BlackRock, for example. Now, from our perspective, this institutional embrace brings significant benefits. It brings increased market liquidity, it brings greater trust, more robust custodial solutions, and just a mature financial infrastructure more generally. Okay, so, but we emphasize in the paper that these developments, while positive in many respects, do raise some concerns that we need to be aware of. As institutions accumulate large proportions of Bitcoin's fixed supply, of course, we know there's only going to be 21 million Bitcoin ever produced, and we're already 90% through that mining of the Bitcoin. So we risk a drift towards kind of centralization. Now, this kind of runs counter to the cypherpunk Bitcoin founding ethos. We also highlight how expanding institutional involvement may bring stricter regulation. It's going to bring enhanced surveillance, and even the possibility of pressure to change the protocol. We see some discussion now about how to address spam and whether people should be running the original core development protocols or whether people should move to knots and so forth, just in terms of the nodes running Bitcoin. So we also discussed the rise of country-level adoption. The obvious nations, of course, El Salvador, Bhutan, are actively accumulating Bitcoin. El Salvador is purported to buy 1 Bitcoin per day. And Bhutan just mining Bitcoin using its hydropower, excessive hydropower. And of course, the United States, who had the creation of the Strategic Bitcoin Reserve. Now, this marks a kind of major geopolitical shift in many respects. We believe this opens up profound research questions. We need to know, how will Bitcoin reserves influence global currency competition? What are the macroeconomic consequences of countries having Bitcoin strategic reserves? How's this going to shape the future of the dollar? So this relationship between Bitcoin and the dollar is particularly unclear at the moment. Are they complements? Are they going to be substitutes? And how does that fit with the role of stable coins, which I'll touch on later? The second major theme of the paper is to look at Bitcoin and criminality. So we address this relationship between Bitcoin and illicit activity. Now, often governments historically, and even so the European Union, is still bringing this up now as a major issue, that Bitcoin is only used by criminals. And Bitcoin's early association with the Silk Road marketplace, for example, which would be where you can buy and sell goods on the dark web, public perception, it just often exaggerates this scale of criminal use. So in our research review, we emphasize 2 important points. First, while criminal activity undoubtedly exists, as it does in any financial system, the share of total Bitcoin transactions is far smaller than commonly believed. Cash, of course, remains the main medium of exchange for illegal finance. So, while it undoubtedly exists, this is a very minor amount in terms of criminal activity. Second, the dynamics of crypto-related crime are evolving rapidly, of course, so we need to be aware of how criminals may be evolving. Criminal actors now can exploit mixers, which is where you send your coin and it gets mixed with other coins and you get some different coins back. Cross-chain bridges, for example, decentralized exchanges, and increasingly sophisticated laundering techniques. But at the same time, while this is undoubtedly true, enforcement agencies are deploying machine learning and forensic tools that can really look into the detail and detect abnormal on-chain patterns, chain analysis being one of the companies involved in this enforcement activity. So again, it creates a rich number of research questions we should look at. How can regulators identify illicit behavior without eroding the benefits that Bitcoin gains from decentralization? Will regulation simply push criminals to more anonymous platforms? Certainly the price of Zcash and Monero have increased recently. How do high-profile hacks or terrorism financing claims shape public trust and investor behavior? So, how investor behavior depends on this reputation effect. So these are the issues we believe, and they demand interdisciplinary attention in many ways. They link finance with computer science to criminology, for example. The third pillar of our paper looks at this Bitcoin's relationship with stable coins that we think deserves more research. So the third research frontier, we explore, it kind of concerns stable coins. They've become an integral part of cryptocurrency ecosystem very rapidly. Tether has been around maybe for 10 years, now headquartered in El Salvador. And that created USDT, and then USDC is Circle, who recently floated on the US stock market and the stablecoin market now exceeds 250 billion, and these rank among, I guess, the most widely used digital assets. This was not always expected, but that use case came from developing countries and countries with weak currencies not trusting their domestic currency and wanting to transact in what we call digital dollars. So in our paper, we discussed these major regulatory milestone, which was the Genius Act. This establishes a kind of federal framework for payment solutions. Coming sooner will be the Clarity Act, which will again make clearer the whole ecosystem in digital assets. We argue that this legislation will have significant implications for global financial markets, and of course it raises important research questions which we highlight in the paper. So, for example, will regulated dollar stable coins strengthen or challenge the dollar's reserve currency status? Of course, you've got stable coins in different currencies, as a European euro stable coin as well, for example. Should algorithm stable coins be outlawed? We had the collapse of projects such as Terra Luna, where the algorithm failed and the whole currency collapsed and it depegged. What constitutes adequate reserve transparency? So in the early days of Tether, of course, it was issues with how you audit it. The big four auditors wouldn't agree to audit Tether. How did Tether deal with it? What should it own? Should it own shares? Should it own gold? Should it own Bitcoin? Should it just own treasuries? How transparent should these reserves be? And finally, how will stable coins interact technically with Bitcoin? This is particularly through, we've got Taproot assets and through Lightning. So how can we blend the Bitcoin ecosystem with stable coins? Again, are they competitors? Are they substitutes? And how's this relationship going to develop in the future? And we believe the relationship between Bitcoin and stable coins is likely to become one of the most impactful and important financial developments in the coming decades. So just to kind of summarize what we cover in this paper, we call for much deeper, rigorous academic research that engages with the Bitcoin ecosystem. As it continues to evolve, the implications for financial markets, for traditional finance, regulation, monetary policy, and technical innovation are only going to grow in importance. We believe future research has got to go beyond just the simple price dynamics of looking at the historic 4-year cycle and the booms and the busts and the halving, and it's more important to link how this links to more macroeconomic policy. Is the 4-year cycle dead? Is the 4-year cycle going to continue? These are interesting, and there's quantitative econometric models, the power law model, for example, that can do a good job on this. But I think we've got to move beyond just the price dynamics and market efficiency issues to discuss broader systemic questions. We also need to look at, again, the environmental and financial impact of Bitcoin mining. We've got about upcoming protocol upgrades. We also need to look at how Bitcoin might be valued within these traditional financial frameworks. So Bitcoin kind of stands at this intersection of finance, technology, and geopolitics. And as researchers, we think it's our responsibility to illuminate these developments and to help policymakers navigate this rapidly changing world. So that just gives you a brief idea of what we covered in the paper. We believe there's a lot more work to be done in the Bitcoin ecosystem, how it relates to macroeconomics and traditional finance. So we hope to follow this up with a Frontiers 2 paper in the near future. And again, thank you for listening, and I hope you enjoy the paper.